Hey, what's up, my trader homies? It's your boy Kevin from Touchdown Trades. I got my flying gear on today because we're going to be talking about NIO stock. I got the flying shades, the aviator glasses, and the Tom Cruise Top Gun jacket on because we're going to be discussing an EV stock. And we know that all EV stocks over the last few months, or the majority of EV stocks, have gone and they've taken flight. They have absolutely lifted off. The EV sector as a whole has been like the Hulk after smoking a pound of crack. They've ran up huge. EV stocks have been extremely strong, and today we're going to be discussing one of the ringleaders. We're going to be talking about NIO. NIO, the Chinese Tesla, has been no exception, and it has gone absolutely to the moon. In March, it was trading around $2.20, and this past week, it hit highs over $20 per share. Well, there is some bad news surrounding NIO, and I think we need to take off the aviator gears because the flight is about to become a crash landing. And we're going to be discussing the very, very bad word surrounding NIO stock. No, it's not. It's a word called dilution. And this is one of the worst words you can hear when you're an investor or a trader in the stock market and you're along a stock like NIO. And today, I'm going to be talking about 3 reasons why I think NIO stock is going to pull back and that you might need to be pulling the cord of your parachute if you're currently a NIO stockholder. So stay tuned. Hey, what's good, my trader homies? It's your boy Kevin from Touchdown Trades. Today we're going to be discussing NIO stock, NIO Inc. It is another EV manufacturer, another electric vehicle car manufacturer that has been absolutely bonkers of late. They've made a huge move, trading back here around $2 in March. Just last week, they broke highs of over $20 per share. So the whole EV sector as a whole has been extremely strong, and this NIO has been no exception. But today we're going to be discussing 3 factors that I think are going to lead to a pullback in this NIO stock. But before we get started, check out the link in the description. We got a 2-week free trial for our swing trading alert service and chat room. We've been killing it. We just crushed a trade, 40% trade in AMC. If you're new to the channel, we talk about the hottest stocks in the market every single day, and we drop 2 swing trading videos a week, so consider subscribing if you're into that type of thing. All right, so let's jump right into this NIO stock. So we were trading at all-time highs last week. Everything was looking great. The EV sector was still strong as can be. Tesla was just about to make the stock split. Tesla was still extremely strong, leading the sector, but then NIO did something we never like to see. They pulled a dirty trick, one of the dirtiest tricks in the book. The stock is running high. Companies will sometimes try to raise capital, and they did just that. They announced a public offering. They are diluting the shares, and the stock did not respond good to it. We sold off from the highs of around $21 when they announced the offering and rolled over. So the first reason I believe NIO is due for a pretty drastic pullback is this public offering. There is pros and cons to this offering. So they priced the offering at $17 per share, which is lower than what NIO was trading at pre-offering. So that's never good when you're a stockholder and the company that you own prices an offering lower than what you own the stock at or lower than what it is trading at currently. But NIO says that they're doing this to try to expand the market and get out of China, which they absolutely need to do. I agree with management on this 100%. I agree they need to get into Europe. They need to get into the United States. They need to get out of Asia if this company is going to grow into the valuation that it's trading at today. But it's never good when you're a stockholder when the stock that you own gets diluted by an offering. An offering is where the company will sell more shares in order to raise capital, in order to fund a project, or in this case, try to market their product in other countries, as NIO right now is basically only selling their product in China. Another reason this offering is kind of catching me off guard is that NIO initially announced that they were only going to raise through 75 million shares. They were going to only raise 75 million shares, but then they came back and upped it by 20%, which tells me that this might be a little bit shady and that they initially came out with the offering and they saw the reception was there, the demand was there for this offering. People were willing to buy the shares at $17 and they're like greedy, they're rubbing their hands like, okay, these people are willing to buy this at 17, let's throw more shares out there and dilute this more and raise more capital while we have the opportunity. I don't like to see stocks raise when they are on a heater, when they've made a huge run and then they raise and dilute the company. It's never a good look when that happens. Sure, I agree with management that they do need to get out of China and get their product in front of the European and American consumers, but this just isn't a good look. This public offering just is not a good look for NIO right now. There is a lot of media out there of NIO management talking about trying to get in Europe by 2021, which I think is very important. If this NIO does not expand, it is going to die and it is going to go back down sub $10 per share. Mark my words on that. If they do not get into Europe, they do not get in the United States, they do not get out of China, this NIO will not break out and it will roll over and will be trading under $10 a share by 2022. Mark my words on that. But CEO William Lee has came out and said that they are trying to get in Europe by 2021, which is huge news and is very promising. So it is good to see that. If you're a NIO shareholder, it is good to see that management is wanting to get out of China. The second reason that I think NIO is due for a pretty severe pullback is just the valuation. We're trading at extreme levels right now with sales of only $1 billion, trading at a market cap of $23 billion, a price to sales ratio that is just extremely high at almost 17, a price to sales ratio of almost 17. Let's compare that to Tesla. People say these EV manufacturers are not auto companies, they're technology companies, and that is why they trade at higher valuations. Okay, that's fine. So let's compare it to Tesla, the leader in the EV space, and see how the two compare. Okay, so here's Tesla's numbers, and we have a sales of 25 billion on a market cap of almost 100 billion, but a price to sales ratio of only 3.6. Tesla is trading at a valuation of 1/4 a price to sales ratio that of NIO. Tesla is trading at a high valuation, right, compared to its auto manufacturer peers. And NIO is trading 4 times higher than that on a price to sales basis. So some NIO bulls will come back and say, wait a second, Tesla's had more time to grow. NIO is still a baby. NIO still in its infancy and it needs more time to grow into that valuation. Sure, if they can get out of China, that's true. But if you're a NIO stockholder, you better be hoping they can get out of China, because if they don't and they're stuck and they can't get into the European markets and they can't get into the American market with their product, that valuation is just way too high. All right, so the third and final reason that I think NIO is due for a pullback is that the cat is out of the bag. And what I mean by that is, check out this tool I like to use when I'm plotting a swing trade, and I think a stock may be too extended to one side or the other. I like to check out this tool called robintrack.net. And what this tool does is it tracks the amount of Robinhood brokerage accounts that are holding a specific stock. So here we can look at NIO. This green line is the Robinhood shareholders, the amount of Robinhood accounts that are holding NIO shares, and this purple line down here is the NIO stock price. And we can see that there is some FOMO going on in the market right now. Robinhooders are scooping up NIO shares, and as the NIO price rises, the amount of Robinhood accounts with NIO in it are just rising exponentially as well. So what I like to see is that when the price rises, the amount of users are dropping because they're taking profit. And I just think when Robinhooders are just buying, there's a lot of FOMO going on. When that buying stops, there's going to be some panic selling that comes into play, and this NIO is going to pull back drastically. All right, to conclude the video, my trader homies, let's break down this NIO chart and talk about where I think this thing's headed and where we could possibly get in on a dip buy and look to catch this thing on a swing trade if the opportunity is presented. Because I do like the company, and I do believe if they can get out of China and into Europe here shortly, that this company has tons of potential. But I just don't like it at the price that it's trading at right now. So we can prep and plan, draw out our trend lines, and wait for a pullback and then get in. So I got a daily chart pulled up right here. So what we have here is, this is where we were trading pre-public offering. We got the public offering, we rolled over. Today we did regain a lot of that sell-off and we reclaimed a lot of it. But what I want to see is if this level can hold right here at the $15, $16 area, then I think this thing can consolidate and have another leg up. But what I would like to see is I'd like to see this 1550 level break down, and I'd like to start buying in front of this $11 gap fill area right here. That gap fill area is going to be really hard for this thing to break through, and I will 100% be interested in buying this NIO in front of that level as it consolidates, and then we get the next move up. I think this thing does need to come down, pull back, and rest it a little bit before we get the next leg up. Because let's look at a faster time frame, and it'll give us a better understanding of what we're dealing with. So I got a 5-day, 5-minute chart pulled up here, and we can see that this was the public offering news. That was the sell-off, and this is the reclaim today. We're trying to reclaim that sell-off due to the public offering. So I think it's going to be very hard for us to get back above these levels because there was tons of volume traded in that area. It's going to be hard for us to just go straight back to all-time highs because we all know volume acts as support, volume acts as resistance. Price isn't support, price isn't resistance. It's the volume traded at those levels that acts as the support and resistance. And we've had tons of volume traded in this area here, and it's going to be hard for that NIO to get back above that level. I think it's more likely that we roll over and we break through this 1550 level, and then we find a base, and then we make the next move higher if there's news coming out about NIO getting into Europe and the US market. But to conclude, if they don't get into Europe, they don't get into US markets, this thing's going back down to $10 and then ultimately back down to $5 where it came from. But if they can get into the United States, they can get into Europe, this NIO could be the next Tesla. It's a very speculative play. It's the kind of play that either you're going to lose a ton of money on or you're going to get rich on. That's why you should only allocate a small percentage of your portfolio to a speculative play like this NIO. I hope you guys got something from this video. If you did, you know what time it is. It's time to give the like button, the touchdown trades, snake eye jab in the eyes. We do it every video because we just do not like the like button. It is not our friend. And when something is not our friend, we jab it in the eyes with the snake eye jab. All right, guys, I love all of you, and I'll catch you in the next video. Peace.
Drop.